morning, CNBC-TV18 learns that IPO-bound B2B platform Zetwerk is actively engaging with family offices to secure an investment ranging between $20 million to $30 million. The company is also in negotiations with additional family offices, high net worth individuals, and ultra HNIs for further investments ahead of its impending IPO. Zetwerk has also selected several banks to facilitate its IPO. And to talk to us about all of this and more, joining me now is Amrit Acharya, the co-founder and CEO of Zetwerk. Amrit, welcome back to Startup Street. Let's talk about the IPO. How soon can we expect Zetwerk to list, and what is the IPO size? You know, the public offering is expected to raise at least $500 million with a potential valuation of approximately $5 billion. If you could confirm this.
Thanks for having me on the show. We are looking to raise around that number that you just described. Of course, the final valuation, that's something the markets decide. What we can share is we just raised a round in December. We raised around 90 million in that full year from a couple of venture capital firms. We did it at 3 billion pre-money. So in some shape, that'll be the anchor point on how we decide the final IPO pricing, the sizing, etc. But yeah, ballpark in those numbers.
How soon are you planning to list?
No, we are looking to do it. We're looking to file the DRHP this year, and that may happen in 6 to 9 months. And however long it takes to get the approval, post which we'll be ready.
All right. You've also selected, Amrit, several merchant banks to facilitate Zetwerk's IPO. CNBC-TV18 has in fact learned that the list includes Axis Capital, Goldman Sachs, Jefferies, JM Financial, JP Morgan Chase, and Kotak Mahindra Bank. Can you throw some light on this?
Yeah, we're still in the process of fully finalizing that list, but some of those names are correct. Like we have finalized, for example, Axis as a left lead. We'll be working with Goldman and Kotak. And few others we are in process of finalizing that. We'll do that shortly, but yes, we'll be hopefully working with 4 to 5 banks in the process.
All right, 4 to 5 banks, and you've confirmed some names from our list. Amrit, in December, like you mentioned earlier, Zetwerk raised $90 million from investors, including Khosla Ventures, Indigo co-founder Rakesh Gangwal, and others. And like I mentioned earlier, sources tell us that you're looking to raise between $20 to $30 million. Can you confirm this? Who are the investors, and where do you plan to use the funds?
Yeah, no, so we are still in mid-process. We have not finalized this raise yet, but we're looking to raise around 30 million. So the main intention for us is, so far, we have built the company, a little bit under the radar, a little bit doing our own thing, focusing on niche areas. And mostly we have done it with the support of, private equity, venture capital, traditional investors. As we are looking at the next phase of growth for us, we want to learn from people who have actually built businesses in India, who have done it over, many years, sometimes even decades, and have seen many cycles in the Indian economy, both positive and negative. That's our main motivation. So we're looking to do that over the next.
So you're confirming our numbers, though. You're also looking to raise another round, and CNBC-TV18 has learned that you're in conversation with other family offices. Is that true? Apart from this 20 to 30 million, are you looking at another round?
No, it's the same one. It's the same one.
It's the same one. Okay, let me talk about your US operations. They've grown rapidly. You've generated, 20 to 25% of the company's global revenue. Going forward, what's the revenue mix going to be, Amrit, and what are the growth targets for that region?
Yeah, see, we believe that manufacturing is at an inflection point like IT services were 20 years ago. Make in India for the Indian economy, but make in India for global economies, leading with the US, leading with Europe. These, I think, will be big macro themes for us for the next 10 years. So today it's around 2025. It used to be 0 3 years ago. So you can imagine it's growing faster than the rest of the business. We would like it to be even as high as more than 40-50%. And that's the direction we are working towards. Yeah.
All right. One final question, Amrit, before I let you go. How are the evolving global supply chain dynamics, particularly the China Plus One strategy, impacting your business operations? If you could give us a breakdown of revenue from your different businesses. You've got renewables, electronics, precision parts, and more.
Look, close to a third of our revenue is renewables. Close to another 15% is what we call precision manufacturing, which goes into aerospace, med devices, high-end manufacturing, and then the remaining is electronics and capital goods. This mix will also evolve. Almost 60% of our revenue, directly or indirectly, comes because of China Plus One. These are global companies, either based in India or based abroad, who used to buy a lot of product from those markets and are now moving their production to India. The headline, of course, is Apple setting up a huge supply chain for iPhones in India, but it's an industry-wide trend. You talk to most customers, they're all somewhere in that process of figuring out how much of their supply chain they want to transition. So we believe that, next 10 years,
Okay.
that'll be a big team, and that's what we want to operate on.